morning, good morning. How's everybody doing this morning? 9 a.m. Tuesday, July 13th. Nice to see you all here. Anyone see how crazy the markets go? Yeah, we got some movement in the market. I didn't notice that. What was that fueled by? Any idea? Anybody have any guess? What's fueling this big move? Any big news coming out? I was scanning around. I couldn't really find anything specific. No data. No specific data coming out. Later we have, in about 12 hours, we got the Kiwi interest rate. Besides that, at 8:30 we had consumer price index. Positive. Previous year-over-year was 3.8. Consensus 4 came out 5, but that's enough. I guess that is what is fueling. That was a half an hour ago. Alright, so that is considered to be positive. Positive straight into supply, so no. Be the judge of that. I won't say anything much about that. You know what I think about stuff like that. So yeah, CPI, US CPI. So how's everybody doing today? Good? You guys doing good? Glad to see everybody. We're going to take a look at the markets and see what's going on, as we do, and see if there's any trades that we can take, and just get an overall feeling of what's taking place so we can be ready for anything. So the first thing I wanted to mention was just that big move that we saw today. That just like came out of nowhere. But everything still stands. Nothing changes in regards to the analysis. And that's one thing I will press upon you, is one of the main reasons why I love doing the majority of my analysis on the markets over the weekend. Because every weekend I get a CFTC COT data, and I look through it, sift through it, go through the historical records, look at the charts, and I do this report. And it takes me a very long time to put together, but because it's very detailed, and I go through everything. I apply the Sherlock analysis process, okay, what we teach here at the school, how to examine price action, how to examine the COT data to determine what the banks are doing with price and what is likely going to be price. Okay. So that's what I do, and so that whole process always takes place over the weekend, and it's when the markets are closed, and it really helps me to put me in the right state of mind before the markets open and things start moving. Because once things start moving, you know, your mind will play funny tricks on you. Okay, like seeing this big rally up in the dollar. You know, if you don't have a solid base, you're going to start thinking the dollar's going to rally. Okay, it's like a famous saying, you know, if you don't believe in anything, fall for anything. Right? If I don't come into the markets with a strong understanding of what could happen or what is happening, then, you know, I can fall prey to moves like this in the market, like this rally here. I can easily get confused. You know, this is happening. or easily get suckered into wanting to take long positions, or easily change my mind on what it was that I was believing was going to take place based on the analysis that I did over the weekend. So we know that there's a very good chance that price is going to drop with the dollar. We talked about this many times, and we know why that is. We know that there is an area of supply here by the banks. Okay, so no matter what happens, we always have to remember this is institutional supply. Okay, and so we could take it a step further, and we can look at the positions held by the banks recently. Let's just switch it like this. Here we go. And so the banks are hitting supply. And when we look at the positions, okay, we see that they were aggressive with 30,000. And they dropped them down to 27, 25, 25, and then just recently another drop. Dropping short positions. Okay. And that was taking place as price was rallying up to contact that supply. So if price was going to drop now, you see what's happening here. Their positions here were neutral. They started to make them a little bit more bearish, and then they dropped it back to neutral. Now, this could have been to help facilitate the move up, because we do see that they were bullish and they were adding positions. So if they were indeed about to drop price from this supply, what would they need to do to drop price from this supply zone? They'd need to fill in short positions, right? They need to be selling this market, selling the dollar. So if they're selling the dollar, they need what? If you're entering into a market and you want to sell something, what do you need? You need buyers, right? But how are you going to lure people into buying? How would you lure people? This? Just saying. Could be, maybe not. But this is what I'm going to point out. I'm going to point this out because this is what sticks out to me immediately. All right? When I'm trading, I'm always looking for logic and reason. There always has to be a logical explanation for what is taking place. Because the second you step away from logic and reason, you will fall prey to what they want you to believe. They want you to fall into this emotional way of thinking, right? So when I say they, what am I talking about? I'm talking about the biggest banks in the world that are controlling price. They are pushing price. The big banks, JP Morgan, Citi, HSBC, okay, list goes on. I posted the list a few times on social media. You guys can look it up. But just type it in. Who are the major contributors to the Forex markets? Okay. So the positions we're looking at is their positions. So we can locate their supply and demand. We can locate data that tells us what their positions are. The rest is up to us. We got to be able to extract the data, do the analysis, and determine using our own minds what is likely taking place. And if you can do this, you will navigate through the markets successfully. Just like if you apply these same principles to life in general, you will navigate through life successfully. If you don't, you will fall prey to what they want you to fall prey to. So I'm looking at this and I'm saying, okay, consumer price index came out to be very positive. Interesting. Okay. So let me ask you, if this consensus wasn't 4.0 and it was 5.0, and the number that was released was still 4.5, wouldn't this be red? Would they not change this color to red? Would that not be then considered to be negative, even though it's the same exact number? So the only thing that needs to be changed is that consensus number. Interesting. That's the only thing that needs to be changed. How convenient. That's pretty convenient, isn't it? Yeah. You don't even actually have to change the actual data. You just have to change the consensus number. So if that was higher, then this would be considered to be a negative outcome for the dollar. And then the dollar would be dropping. But prices and supply. But they've been reducing their short positions down to 19,000. If they wanted to get it back up to 30, they'd have to be selling the dollar. And to be selling the dollar, they need buyers. So instead of putting the number to 5.0, maybe they put it down to 4.5 or 4 or whatever the number was. Okay, put it down to 4. Is that what is happening? I don't know. I'm just logically talking this out. Okay, I'm logically thinking about what's going on here, and I'm sharing with you my thoughts. Okay, this is my thought process as I'm examining what's taking place in the markets. So that is what I see. That is what I know. Okay. Now, is there a possibility that price just rallies up and removes this supply? There is a slight possibility that can happen. And we've talked about this and the reasons why. But it's not because of this data. That's for sure. Okay? If price was to rally up a lot higher and remove the 93.43s, of course you would search online and you would read, oh, price rallied up because of the consumer price index. Okay? That's what they would say. Just like if price was to drop and all they did was change their consensus from 4.0 to 5.0, and then the actual number is the exact same, being 4.5, it would be considered negative. And if price dropped down to here, you would look at the news, and the news would say, yeah, price dropped because of the CPI, the consumer price index. It would be the exact same thing. But yet the actual data is the same. Okay? But their explanation would be exactly the same. So I see that, and I see supply in play, and that's all I see. And until something else happens, which is this area of supply gets removed, unless that happens, my view on this market does not shift at all. Okay? It does not shift at all. That's the only thing that can happen that would make me view this differently. And again, is there a chance that happens? There is a slight chance that happens. Okay. Let's take a look at gold and see what's going on here. So gold is holding pretty well. It reacted to the data, but not much going on there. Just a little bit of an up and down move, as you can see on the 4-hour chart. Okay, a little bit. Okay, but it's still staying within the range from previous trading. Okay, so a little bit of up and down, and then likely continue after it settles down, and it looks like it's settling down. So nothing's changed with respect to what is taking place with gold. Still the same agenda. Oil, let's take a quick look at oil. What's happening with oil? It dropped, then it rallied. Okay, the profit taking from long positions rallied, and then just coasting sideways now. So not much in terms of what is taking place here. And again, as I've mentioned before, this is a tough chart to decide what is going to take place now, because on the higher time frames, we've just had a major area of supply removed. Okay, and it's just like what I've always explained. If you had a bunch of lumberjacks and their job was to go into a forest and clear a path for you to be able to pass through this forest, eventually you're going to get tired clearing through this forest, and eventually you're going to stop and you're going to walk back through the area of the forest that you've cleared, and eat, refuel, get more energy so that you can go back into the forest and continue clearing that forest. So if that does take place and they reverse, then eventually I would suspect that they're going to reverse price and start heading back in the original direction that they were heading in. So, but we're at that point. Do they run out of energy? Do they continue? It's likely that they will run out of energy and drop price. So we don't know. So that way, this is why we want to stay clear of trading this market. What's our like situation? Can we get the like button hit? Can we get it up to at least 50 today? Can we do that? And any of you that haven't subscribed, subscribe to the channel and hit the notification button so that you get notified whenever we do our live sessions. Alright, if you're new to the channel, welcome. We're just discussing the supply and demand of the banks, the institutional supply and demand, the banks that are controlling price, the largest traders in the world, the ones that actually move price up and down. We are tracking their buying and selling. We are tracking the trend lines that they observe. And yes, they do observe trend lines. We know this for a fact. And we know for a fact how to locate their trend lines, which is extremely, extremely powerful. Locating the bank's trend lines allows us to locate the trends that they create, okay? Whether they're uptrends or downtrends. We can spot the trends right at the moment they are creating them. We can also spot the trends before they begin. All right, many times. We'll locate the exact area where price reverses before it begins a trend. In harder to read charts, we can spot the trends that they create the second they create them. That's extremely powerful, and that's with the use of knowing how to locate their trend lines and obviously their supply and demand that they create on the charts. How can you join? Good question. You can go to our website, whiteoakfx.com, and on the top right hand corner there's a big button, Start Learning. Let's just wait until this loads up. I'll get back to that after it loads up. Yeah, I'll tell you. There she is, top right hand corner, Start Learning Now. There you go. You have a couple options. Start Learning Now, you click on there. And that's if you want to become a student. If you want to become a student, then you have an option here. You can click here if you have used the 3-month promotion already, or if you're looking for a yearly membership, you can click. Another way to access this information is click on resources and click on membership opportunities here at the top. You just click on membership opportunities, and we've just added a yearly option for basic membership. Okay, so you want to become a student, you can sign up to be a student here. You have the yearly option as well, which will save you some money if you want to do that. And then we have the basic membership, $49 a month, which, by the way, is a steal, absolute steal, because we're going to be, in the near future, we're going to be getting rid of this option, this basic option, and it's just going to be a student membership and the Watchlist Pro membership, okay, which will get you access to the Watchlist Pro, and as well as the EURUSD report, the basic video library, the observation journals, okay? You'll get that, but it's going to be a different price. It's going to be $49. So if you become a basic member now or use the yearly option, you'll be grandfathered into this. And so when this basic membership disappears forever, you'll be grandfathered in. You'll have access to the Watchlist Pro and everything else that the basic membership came with. Okay? Watchlist Pro is an additional service. It's currently available through the basic membership, but it will be disappearing soon. Okay, basic membership didn't include Watch List Pro before, but we're doing new things with the watch list, and we've been extremely successful with our watch list, and it's been helping a lot of traders. So that's going to be what we're going to be doing. All right, so let's get back. So Aussie. Now, Aussie is one of those charts that we've been talking about, and we are seeing a lot here on the monthly chart that would tell us that price is going to be dropping. Okay, because we have a monthly area of supply in play right now. So this is an area of selling by the banks. Okay, and so when selling comes into the market by the banks, it normally will move the market in the direction of the selling until something comes in that will counteract that pressure of price to the downside. And the only thing we have here is an area of demand. And as you can see, price has begun to move down. We got a bearish engulf, and it's pausing right now. So by looking at the Aussie dollar chart, there's nothing to stop price from moving further down. Okay, so that is one of the reasons why we were looking at the overall markets and determining that there is the possibility that price continues to drop on the Aussie, which would put pressure on all the other markets. Okay, put pressure on all the other markets. So looking at the Kiwi was in somewhat of a similar situation, although the only thing that was different about this one is when looking at the weekly chart, we have this area here. Man, that's been nice. But nonetheless, when we switch over to the monthly chart, it is the same scenario. Okay? Same scenario. We have institutional supply coming into the market, putting pressure on price to the downside. And as you can see, we got the bearish engulf, and price started to decline, and it's falling short of hitting institutional demand, which is here. So that was signaling to us that we should be very careful and watchful of this move to the downside in the Kiwi. Because if we're seeing two charts showing great signs that price can decline even further, then we have to respect that. Why? Because what tends to happen in one chart will happen in the other charts. Okay? Now, that is within a certain reason, because we want the charts to be correlated, because the charts are correlated. So we want what we see on 1, 2, 3 charts to match what is going to take place on the other charts. Okay, that's a really important thing, because if they're not matching, then there's a problem, and that means you're not seeing something. And with respect to the euro, okay, what we've been seeing with the euro is great promise and great signs that price was going to rally. Okay, we have institutional demand in play in the euro, but the dynamic of what has taken place on the chart for the euro is quite strange, because when we examine all the time frames, we have talked about this before, there are no trends on the monthly chart. No trends exist here, okay? And we're talking about trends not in the sense that, you know, the way that regular technical analysis or conventional technical analysis would locate a trend. We're talking about trends located by the system we use to locate trends that the banks create. So I could tell you right now, the banks have not created a trend on the monthly chart on the euro. Okay? The banks have not created a trend on the weekly chart, the euro. The banks have not created a trend on the daily chart for the euro. And currently there is no trend on the 4-hour chart for the euro. So when there is a lack of trends, there is a lack of direction. Right? A trend is the institutions created a position, right? they've accumulated a position, let's say a long position. They've bought the euro, and then they are pushing price upwards. And they're pushing price upwards so long that they actually create a trend to the upside, meaning price just wants to move upwards. The momentum is upwards, the buying is upwards, and therefore you have a trend. Okay? Which means they've already done what they've needed to do to accumulate their position. That is what a trend is. When a trend doesn't exist, then that means something else is going on. And that's pretty evident when we look at the data. All right? And this is one of the points that I was mentioning in the EURUSD report. So when we go down to the euro, for instance, let's take a look at the euro. Here's the data for the euro. I want to point something out to you. Take a look here. The sentiment back in March, beginning of the year, was bullish. Look at what it has been since then. Okay? It's more of a neutral tone. Okay? Neutral. Why? So if a trend was about to be formed, it would be neutral. Let's say price was dropping, okay? And it was hitting massive demand, and eventually within a year or 6 months, it was going to turn from downtrending to uptrending. What we would see is we would see the sentiment being very bearish, and then as demand gets contacted, it would turn to neutral. And as the buying and the momentum starts to build to the upside, the sentiment would turn to bullish. That's the progression that we would see. Now, in this case, we have the sentiment was bullish, and now it has been somewhat neutral, more neutral. Not very neutral, but somewhat neutral. So what is this telling us? This is telling us that they're not so much accumulating a position right now. They're not so much, having already accumulated a position and the momentum is to the upside. So something else is going on. And when we look at the charts, we can clearly see there are no trends. Okay? When there are no trends, then other things are taking place. It's either an accumulation of a position or they are offloading a position. It's one of those two. And what do we see when we look at the positions here? Okay? They were recently piling into short positions. Why would they be piling into short positions? Well, we know why. Do you remember what happened here that we talked about? Do you remember what happened up here? Remember how the euro was positive for NFP? Do you remember how they made it negative for the dollar? Okay, they made it negative for the dollar, so the dollar dropped and the euro rallied, and they gave off the impression that the euro was going to continue higher. And then what happened? It moved up into an area of supply, only to reverse and drop. Okay, so that is what happened. They made it very positive so traders would buy as they were selling. Why were they selling? They were selling to get price to move down, which took place. So now we got to understand where in the storyline are we currently with the euro. We saw the trickery that they played at the highs. They lured retail traders into buying. They came in, they sold it, and they dropped price. All right, so now price has dropped. So now that's the point that we're at right now. We look at the sentiment. Is it bullish? No, it's not. Why? Well, because price just dropped. And we have an increase over the last 3 weeks, 118, 121, 135,000 right now shorts. What do we see with longs? They've also been increasing, 207, 209, 2. So this is a decent sign, because what we're seeing is, yes, they were increasing shorts. That's what facilitated the move forward. But at the same time, they're also increasing long positions, 207, 209, and 212. Okay? And today we get good news. Good news for the dollar, which is bad news for the euro. If they were accumulating long positions, if this was going to still continue, the buying here, if this was going to still continue, you would need people to sell. Just like you would need people to be buying if you were selling the dollar. So we know why they were increasing the shorts. That was to get price to drop. But why are they increasing the longs? Well, what we do know for a fact is that price is sitting within an area of demand. Okay? So logically, we can conclude that the buying is happening at demand in preparation for a move higher. And the selling that recently took place was to help facilitate the move lower into the area of demand. This is all logical conclusions based on what we are seeing. All right? So that is why there are no trends. That is why this here is somewhat neutral compared to what it was recently. That is why what we're seeing is taking place, all right? When you look at the charts and you can tell whether there's trends, whether there's no trends, then it's about looking at the data to figure out where in the storyline price is currently. Okay? Let's take a look at some of your questions before I let you guys go. I think we're good for today. What are we at? 35 likes? Can we get it up? I'd like to see 50 today. If you guys can make that happen, that would be great. New students just want to know if there is a class for level 1 today. You have to go to the calendar, my friend. The calendar. You don't have to ask me. That's why I put a calendar there. Everything is there for you. Okay? Everything is there. All I have to do is click on the White Oak University, Trading University logo. Click on that logo. It'll take you to the student portal. Okay? The student portal is where everything is there. I put a couple chalkboards here on the side. Our new level 1 class began July 5th, and we have one that started yesterday, July 12th. So if you want to know more about the level 1 class, you just click on that, and that'll give you all the dates, all the information. Okay, it's all there. Or you can just take a look at the calendar here. We're on the 13th today. Is there anything in the 13th calendar? Nope. The next entry is on Friday. That's the level 3 session that we have in the morning. 3:30 we have the EURUSD report, the data being released, and then the EURUSD report comes that weekend. And then on the 19th, look what we have here. July 19th, 10 a.m. What do we have? Click on it. See in brackets L1, that's level 1, supply and demand analysis session, USCAD, daily chart, part 3. There you go. All the information's there. Add it to your calendar. You can click on the link. Click on that link, and that'll take you to the page for that class. Okay? All you have to do is come to the calendar, right? And you can reach the calendar by clicking on the school logo, or you can go to members. On the menu, click on Student Portal, and that'll take you to here as well. Okay. Dixie, bull this week. U.S. economy is improving month by month in everything. Well, look, when you trash an economy and you destroy an economy by closing it down, and you shut down everything and don't allow people to open up business and don't allow anything to be open, and you go from completely stalled to allowing something to open, some businesses to open, and so forth, there's going to be a pickup in business, right? So it's not that the economy is great. I think it could be great if it would, allowed to flourish and so forth. But I wouldn't say it's great news for the U.S. economy. I wouldn't say that the U.S. economy is actually great. So I would just take that into consideration, right, when examining the data. And remember, the way we trade, we don't care if the economy is doing well or not doing well. It's all just speculation at some point, because how do we really know? We have to trust data. We have to trust the release of information. We have to trust all of that. We have to consider the legitimacy of all that. So we can't know that for a fact. What we know for a fact is we look at the CFTC data and the positions, and we look at the charts, and that's it. And that's really all we need. And it's a great thing that that's all we need, because if we needed to really count on more, we'd be in big trouble. Because the only thing we can really count on is ourselves. Okay? We can only count on ourselves. That's why what we do is very powerful, because it doesn't require the need for anything else. We don't have to rely on what the news is telling us about the markets. We don't have to rely on the legitimacy of the data releases. We don't have to rely on any of that. Once you know the game, how the game is played, and who's playing the game, and what they're doing on the charts, that's all you need. Let's see. I think weekly, daily, 4 hour and 15 minute is a good time frame for analysis setup. Weekly, daily, 4 hour, 15. Yeah, if you were a day trader, how I look at it is this way. I'm just looking for where price currently is and what zones it's reacting from. And based on what zones price is reacting from, I will know what time frame to trade off of it. So weekly, daily, 4 hour, 15 could be a good set of charts to day trade off of. Although sometimes I'd be looking at 1 hour charts as well. So 1 hour, daily, weekly, monthly, that can work as well. Okay. But yeah, it's whatever you like. If you like weekly, daily, 4 hour, 15, then great, then stick with it. You like how the 15-minute chart looks? Great. Yeah. May you touch on the yen? No, I'm gonna let you guys go. It's about 37 minutes. We will be taking your requests on Thursday, so you can send me your requests on Thursday. After this session, just in the comments section, comment what charts you'd like to take a look at. And Thursday, Throwback Thursday, we'll look at them, okay? You are in level 1 class. How can I go to level 2? So I get asked that very often. And the question is answered here. You go to the website, you go to education, you click on education, you click on graduation, and everything you need to know about graduating from level 1 to level 2 is here, okay? But the gist is this. When you come to the school, you have a set of skills that you have to attain, all right? You have a certain amount of knowledge that you have to acquire before getting access to level 2. Level 2 is very in-depth. In level 2, we're talking about market structures, we're talking about trends, we're talking about the difference between ranging and consolidation. And just to wrap your head around what we're doing, it takes a lot. And you're not going to understand what we're talking about unless you completely, fully understand what we're teaching in level 1. So those who come to the school, what you got to do is this. You come to the school, you join a live class, you do the homework that is offered, and you send it to me before the next live class. Because I'm only going to look at the homework that you've submitted to me before the next live class. Because in each class, what we're doing is we're reviewing the homework that was given. Okay, we're reviewing the portion of the chart that I gave out for you to do analysis on. And we're going through the chart to locate the actual supply and demand and the trend lines. Okay, the true analysis, as we like to call it. The actual supply and demand by the banks and the trend lines by the banks. And so you have to submit your homework before we do that, because we're not going to go through the chart and then I post it up on the forum and then you just copy it and then send it to me and say, hey, I did the work. No, I need you to do the work before we actually analyze it in class. That's the only way, and that's the only homework I will look at. That way I can see exactly what your skills are at and exactly what kind of analysis you're doing on the charts. That's the only way I can help you. I need to see where you're at in your skills. Okay? So the idea is you come to a class. A class is we do a session every 2 weeks for level 1, and they will usually run 6 to 7 sessions. Okay? So you come to one class and you submit your homework. And like I've mentioned before, we have older classes that we've already recorded that are in the archives. And if you want, on your own time, you go through the archive and you go through the previous classes. That's what I would do if I were you. If you really are hungry for information, you really want to progress to level 2. What I would be doing is going through the archive in as well as the live class. Subscribe to the live class, do the homework for the live class, but in your time between the 2 weeks sessions, go to the archive, go through the old classes, and do the class on your own. There's multiple sessions there. You watch the first session, and then the homework that was given out, you do it on your own. Don't cheat. Don't go to the forum and see the completed work, because you'd just be cheating yourself. But do it on your own and see what level of your analysis you are at. Okay, see where your skills are at. And then just do the work, and then watch the next session in the archive where we will go through the completed work, through the completed analysis, and check to see how well you did. Check to see what you did right, what you did wrong. And take notes. Have a journal. Like I always mentioned, have a journal with you. And take notes in your journal. Take note. Right, this is what I did right, this is what I did wrong. Okay? And, right, why did I get it right? Why did I get it wrong? Okay? Learn from it. Take notes, learn from it. And then watch the homework at the end of that session and do it on your own time. And if you go through the archive class and you just complete one archived class, the amount of knowledge you're going to gain is tremendous, because you could do it on your own time. And if you're journaling, the amount of information you're going to gather is going to be incredible. So you don't just have to do the live classroom session, because when you submit your homework to me, I'm going to be looking at your homework. Okay, I'm going to be looking at where your skills are at. And if you just joined the school, you know, our basic protocol is you have to finish at least 2 classes, 2 full classes. Okay, and each class will consist of between 6, 7, 8 sessions, depending. Okay, so it can take you a few months to do that. But if you're really putting in the effort, and the reason why I set it up like this is because it takes a long time to acquire these skills. It's not easy. Okay, it's like learning a brand new language. You know, I could start teaching you a brand new language, but it depends on how much work and effort you're putting behind the scenes that, you know, you acquire those skills to speak. So, but if you're doing work on the side on your own time, then you can acquire those skills faster. So if by the time you finish one class, your skills are there, then you tell me, listen, I've been doing extra classes on the side. So essentially, I've done 2 full classes. I've done one on my own, and I've done one live. So can you check the last pieces of homework that I sent you? Because I think you'll see that my skills are where they need to be to graduate to level 2. And if that's the case, then I will graduate you to level 2. But you need to put in that work first. Okay? So you want to find information about the levels. Here you come. Either level 1, level 2, level 3. You can click on whatever one in the menu, and it'll give you information about that. Okay? If you are interested in learning about level 3 and what we're teaching in level 3, then by all means, come to here, click on education, click on level 3, and that will pop up, and you can read about level 3. All right? So I would encourage you to do that. A lot of information here on the website. It'll answer most of your questions, I think. Okay? Yeah, thanks for mentioning that, Ray. Study hard, yes. I appreciate that. Okay, so that's it. So I'll let you go. Enjoy the rest of your day. Hit the like button for me before this session ends. I would appreciate it. And yeah, that's it. We'll see you tomorrow. And if there's any questions, I think I pretty much answered all your questions, right? That's good. We do have Instagram. You can find me. You can just find it on the bottom of our page here. Excuse me. Right here. Vital Effects. There's our Instagram button. Just click on that and you get our Instagram. Our YouTube, our Twitter, our Facebook, and our Telegram channel. If you're not in there already, you should get in there. Alright. Okay. So enjoy the rest of your day, guys, and we will talk to you soon. Take care, everybody.